Hi, I'm Peter Rose, founder of Longwood Currency Trading. The ultimate Forex risk management rule. What is that? It's really simple. Look, we don't have to trade. When you sit down at the poker table, you have to put your ante in. You have to play. When you do any type of activity, once you start, you have to play. You step up to the bar, you gotta play. In Forex, you don't have to do that. And one of the most powerful risk management things that we have at our disposal is to make a split-second decision that there's nothing there on the screen that would warrant sitting down right now or in the next 5 or 10 minutes and pushing a bid ask. That we can walk away. Just like that. You have to have your trade entry analysis down well enough so that you can evaluate that quickly. And I have a set of rules that enables me to do that. It's like a pilot's checklist before they take off in the plane. Boom, 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 boom. Yep, now that's clear. Off we go. Except the pilot's checklist is much more complicated than that. Mine is 3 things to check, and we're done. And I don't even need it written down. I don't need to even sit down at my desk. I can look at the screen, and I know what I'm faced with. Now, that doesn't mean that things won't change in 20 minutes or an hour, and so the trading platform can stay on, and I'll come back in, and I'll take a look again. But I'm retired. I can do that. 90%, 99% of the folks that I talk with are not retired. You're working a job. You've got to be out the door at 7 o'clock in the morning at the latest to get to your job, and you're not home until 6 o'clock at night. You know, as a software engineer, I had an hour commute. I'd be out the door at 6:30, and I wouldn't get home until 6:30. So if I was going to trade, and I wasn't trading back then, but I mean, I could get up and maybe take a look at things for an hour. I would need a system, which is what I teach, that you can look at the screen and determine right away whether there's something there or not. If there isn't, I'm gone. Maybe I'm up a little bit early for the job. Take a little bit more time and have a nice cup of coffee with your loved ones, or catch up on the news, or get in your car and get a cup of coffee and have a leisurely drive to work. Doesn't make any difference. You're not on the screen. If there is something there, then I want to be able to sit down and get done with it. I don't want to sit there all day managing a trade or wringing my hands over a bunch of decision processes. There's 3 phases to the life cycle of a currency pair, as I've said many, many, many times. There's entry analysis, position management, and exit methodology. If you don't have an entry available to you, you don't have to worry about the other 2 because they're not applicable. Go do something else. If your entry analysis shows you the potential that a trade could be there, then you sit down, you run your rules out, and you see whether the trade is something that you could do right now or whether it's going to be in the foreseeable future. If it's going to be in the foreseeable future, that's within 15 minutes to an hour maybe, you sit there at your desk and you watch things as they go, because the whole situation can change in 10 minutes. It really can. If you've done any kind of trading at all, you know what I'm talking about. The most powerful risk management rule that we have is don't trade if there's nothing there. I've done a couple of videos on this. I call it anticipatory trading. If you sit down and you look at that screen long enough, you'll see some magical thing, or the little bridge troll Ed that sits on my left shoulder here and whispers in my ear to do stupid shit will tell me that there's a trade there. Oh, look, Peter's in a reverse triangle pattern that's supported by an RSI and blah, 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 and all this other horse shit. And I'll go, oh, maybe I had a bit ask. I don't think so. Right now, I just did the same thing. I'm looking at I looked at my screen, and again, I'm retired. I'm in and out of trading. I was working on one of the course books, manuals that I have, adding a big section on large-scale lot size trading, working on that presentation, because I'm getting comments from a lot of folks that are not beginners, but they are getting close to that point where they'd be trading multiple full lot positions, and they're not having, they're getting tangled up. There's it's probably, I don't know, 30 or 40 pages or so of just dealing with the concepts of transitioning from small scale trading to large scale trading. So I'm working on that. I'm not looking at a chart. I may glance at it, but I'm not going to be compelled there and go, oh, I was kind of hoping that there's no. You can't do that. That's the ultimate risk management ability, and we make it a rule, but it's an ability, is to judge the situation and step back from the bar if there's nothing there. If there is something there, don't dawdle around. Get on with it so that you can get done with the trade and get on with your life. Your life isn't trading. You're not sitting in front of the thing. I can see these guys all the time. They sit there all day for hours and hours and hours. Who the fuck has the time to do that? And even if they did have the time to do it, who would want to do it? I get all the time in the world. I'm retired. You think I want to sit in front of a computer screen so that I can grind out $500 or $800 a day or whatever it is that I'm going to be able to do? Or if you're trading small lot sizes and making $50 a day or $150 a day, you want to sit there all day to do that? I mean, if I made $500 a day as a software engineer, why would I sit there all day to make $500? I might as well go back to work. I got no risk in software engineering. Somebody's throwing me some money, and I do some work. I got to listen to the bullshit and the screaming and the yelling and all the other crap that goes with that. But that's the price you pay for $100 an hour, right? Oh man, actually, it wasn't $100 an hour. I'm just joking. I was getting a little over $100,000 a year, but you get the deal. I mean, $400 a day. $50, $450 a day, or $400 a day is, that's going to be what you're going to be making to get $100,000 a year. But is that worth it? I mean, you're retired from that, or maybe you don't have the opportunity to do that. You work a construction job, or you're a manager at a small store. You're making $40,000-$60,000 a year, or maybe you're doing some kind of a social work or taking care of folks in some other way, and those jobs don't pay a lot of money. They pay at this particular time $15 to $20 an hour. $15 an hour is $30,000 a year. $20 an hour is about $40,000 a year if you can get full-time work. Very difficult to survive in the United States in some of the major cities on a $30,000 or $40,000 income. And so, wouldn't it be nice to be able to make an extra $10,000 or $20,000 a year in your trading and not lose the $20,000? If you sit there and you look at that and you try to find a trade, it'll be there. You have to get in the habit of understanding that the greatest risk management that you have is not trading. When you trade, you want to be right. And as George Soros says, when you're right, no trade is too big. So you don't want to be shoving all your chips to the center of the table just because you sat there and mystically this chip appeared on your screen and you thought it might be a pretty good idea to throw 6 or 8 lots against it. And I don't think you want to do that. I don't think you want to throw 4 or 5 minis against it if that's all the money that you have and you're trading at $4 or $5 a pip. I mean, I just don't think you want to do that. The risk is too great. You want to be able to look at that screen and say, yep, there's something there. I'm going to set my pending orders up, or I'm just going to wait for the event scenario to hit. So my rule kicks in. Boom, I hit bid ask. I'm in the trade. I'm watching it. It's not going the way I thought it would go. I'm out, and then I step away from the desk because I don't want to sit there. I don't want to do that. I did that the other day. I sat there, I run 2 or 3 trades off. I made I don't know, I made $1,000 or something like that, and made that 4th trade. And let's see, I made $1,200, and I lost $1,000 of that because I made that 4th trade. I didn't have anything else to do, and so I thought, that's good. It's going to be a continuation of what I've already been capitalizing on. Yeah, right. That cost me $1,000. Terrific. I made $200, so that's okay. It's better than losing 10,000, right? So, or 100 or whatever, whatever size positions that you're carrying. But you're going to be doing this stuff on the fly. So if you don't have anything there, get away from the screen. Go to work. Come back, check your charts at night. You might not be trading the same pair because the pair that was active when you got up in the morning might not be very active when you get home. And so you need to find maybe another pair that you trade. Maybe you trade a couple of pairs. You become intimately familiar with that. I don't do that because, and I don't recommend anybody do that. You pick one currency pair that's available when you can trade, and you trade that one pair. You get intimately familiar with it so that you make the correct decisions based on your information as opposed to what you think is going to happen. It's like having a dog. You get to know your dog really well, and you know what pisses him off and all that other kind of stuff and whatnot. But you go to a neighbor's house, you don't know what that dog's going to do if you startle him or whatever. Will Rogers said, when you get to start thinking you're someone of importance, try ordering somebody else's dog around. You get bit. That's what's going to happen. And if you sit there at that screen, nothing good's going to come of that. When you're trying to sit down to develop your trading plan, the first thing that you're going to be trying to develop, other than the mechanics of you're going to trade one pair, you're going to trade during these hours of the day, and this is your position size, and the greatest thing that is going to envelop that trading plan is a framework of trading. And the framework just includes a couple of elements that all of the elements of the trading plan have to adhere to. And part of that framework, one of the elements of that framework that you're basing your whole life on is risk management. What are the key components of your risk management? Now, each phase of the life cycle of a currency position has its own risk management gotchas and rules to resolve those gotchas, but overriding all of the trading itself has risk management. And this rule, this risk management concept of that you don't have to trade. You can step up to the craps table and you can just stand there and drink until you fall over stone drunk. You never have to put your chips on the table. However, if you put your chips on the table in the craps world, you leave them on the table. Nothing happens until you win or you lose. And it's 1.31 or 1.413 or something like that against you on the pass line. That's the best odds on the craps table, if you didn't know that. How do I know that? I know that. In the currency market, you put a trade on and you go, oops, I don't want to be on that. You pull it off. Don't even think about it. Your rules should cover those things. That's part of that overriding risk management rule that I'm talking about now, which is you don't have to trade if there's no trade there. If you thought there was a trade there to your best guesstimate of entry analysis, and you get it on there, and it's not doing what it should do, or what you thought it would do, it shouldn't do anything except what the general order flow of the massive market is telling it to do. Doesn't make any difference what you wanted it to do. But if it isn't performing the way that you thought that it should, and again, performance is based on the momentum. If it doesn't have that momentum, or something looks fishy to you, you pull your chips off the table. I mean, maybe you make 1 pip or 2 pips. Okay, so you're trading 2 full lots, $20 a pip. You make 2 pips. Geez, you made $40. That's 2 pizzas. That might be 2 days of gas for your car to get you a job. I mean, let's not discount these small wins. You're not trying to make $500 a day. You're trying to make $50 a day. And every now and then, there's a statistical probability that the clouds will part and you'll end up with a runner. And I've done a video on runners. And I've done a video on evaluating profit targets. Anyway, you'll end up with one of those situations. And you'll go, I'll be late for work today, Bob. and you just let that run, and you add stuff to it as it runs, and maybe you make 500 bucks when normally you make 50 bucks a day. So we in the currency market are totally flexible as to what we can do and when we can do it. So you got nobody to blame but yourself if you can't make it work, other than the crappy education that you might have, or the fallacies of all this stuff about Bollinger Bands and back patterns and indicators and patterns and all this other kind of stuff. Look at trading for what it is. Look at your risk management rules and make sure they fit that trading, and then develop how it is that you're going to trade. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.